So now I am going to discuss the current issues questions from set A. So first let us identify what are all the questions that have come from set A. It is question number 1 to 9, and then there is 36. Then we have question number 61 and question number 85. Okay, so these are all the questions that have come as current issues. So totally there were around 12 questions, right? So let's start discussing set A. Question number 1. Which of the following is not a component of capital receipts? Okay, so capital receipts. Now capital receipts comes in which chapter or in which part of economy? First of all, this is an economy question and this comes under public finance. So as I have discussed in class, right, we talked about income and expenditure of the government, income and expenditure. So when we talk about income and expenditure, remember in class I talked about income, we divide it into capital receipts, right, and we divide it into revenue receipts, right. And similarly when we talk about expenditure, you have capital expenditure and revenue expenditure, right. So what goes into these? And as I had given the trick in the class, instead of by hearting what comes into these things, I asked you to know what is the meaning of this word capital and revenue. And as you all know, what do you mean by capital? Anything. So capital, okay. So you have all the money that is coming in, income, and all the money that is going out is expenditure, right. So you have income and you have expenditure. The meaning of the word capital is all the money that comes in, the government, it has the obligation to repay that money, which means the money that comes in as capital, the government is having the obligation to repay. So all the money that the government gets in, it has the obligation to repay. So that is capital receipts, which means there is an obligation to repay. It has to repay that money. So what it has to repay? Obviously loans, anything in the form of loans. What is the meaning of the word revenue then? So as I was, you have income and you have expenditure, right. All the money that comes in, it is an earning for the government. It does not have an obligation to repay. So it's an earning. No need to repay, right. For example, taxes, right. You talk about all the profits that are earned by the government or from PSUs, all these things, right. Then fines. So it doesn't have the obligation to repay it, it is its earnings. So the question was on capital receipts and they gave you various components. What is that, right? So if you look at the question here, for example, market borrowings including special bonds. So when we say borrowings, it has the obligation. Look at the question. The question is which is not a component of capital receipts. So obviously market borrowings, the word itself is borrowing, so which means it has an obligation to repay, which means the first option, it is a capital receipt. Second one, external loans raised by central government. Loans obviously again comes under capital. Look at the third one, receipts from taxes on property and capital transactions. Now receipts from taxes, which means the government is having that money, it does not have to repay that money to anyone, right. So therefore, what is that? This is revenue. And the third one, provident fund, again it has the obligation to give it back to its investors. So therefore, the option is C, 1C is the answer, right. And expenditure, if you talk about capital expenditure, all the money that the government spends, right, and it is going to earn back something on return, right. For example, money spent on various projects, money spent on building infrastructure, right? All that comes under capital expenditure. Revenue expenditure, all the kharcha, you know, the money the government spends on, like for example, you talk about defense expenditure, you talk about subsidies, administrative costs, all of these come under revenue expenditure. Of course, the difference between your income and expenditure is nothing but, right, if you have your income, if income is greater than expenditure, then we say we have a surplus. It's a surplus economy. But when expenditure is greater than income, then we say it is a deficit, right? We say it's a deficit. So, if you look at India, our expenditure is greater than our income, therefore, we have a deficit, we call that as fiscal deficit. So, if you look at the question number 6, I am going to continue after 1, I am going to do 6 because you know they are related to each other. So, if you come to question number 6, fiscal policy, right? What is fiscal policy? The objective, see India, because we are a developing country, we are going to have more of expenditure, no doubt about it. But that expenditure should be in such a manner that, you know, our expenditure is more, our income is less, we are having a deficit, but the deficit should be under control. And in order to control our fiscal deficit, we have a fiscal policy in place. So, what is the objective of the fiscal policy? The objective is, yes, we need to control our income and expenditure. Why are we doing this? Because we have to have stabilization and development. That is the whole idea, right. So, 6th question, if you look at it, it is 6C is the answer, okay, fiscal policy. So, 1 is, so both the questions, question number 1 and question number 6, both these come under the chapter public finance. So, capital receipts question, and then you had the fiscal policy question. Okay. Both these come from public finance. So, this was question number 1 and this was question number 6 from set A, all right. So, fiscal policy, remember in class I was talking about monetary policy and fiscal policy, right. Monetary policy given by RBI, fiscal policy given by the government, Ministry of Finance. The objective of the fiscal policy is to control fiscal deficit so that we have, you know, a stable economy, right. So, this was the statement which I gave you in class, right. Okay. So, we are done with question number 1 and question number 6. Let's come to, so there were 2 questions this time which came from this topic, public finance. Let's come to the next question there. Second question, which one of the following statement is correct with respect to societal development? Now, if you look at question number 2 and question number 3, both have come from social development, society. Basically, these are theories from society. You know, not, the second question is a little tough question, but again, as I always tell in class, not all questions you can attempt, there will be hard questions. So, second question is a little tough question, but let's see what it is. Which one of the following statement is correct with respect to the societal development? Okay. So, behavior grows into habits, habits into tradition, and traditions becomes customs. Customs grow into mores, and mores grow into custom. Behaviors grow into customs, and customs grow into traditions. Folkways grow into tradition, and traditions grow into customs. Now, there is no way you can guess this answer until you really know the theory about it, right. Anyways, now let me tell you what it is. If you look at informal norms, so the question number 2 and question number 3, both are theories related to society, okay. These are theories related to society. So, if you look at the first one, if you look at the second question, informal norms, if you take, informal norms, they are divided into 2. We call them as folkways and mores, okay. So, norms, societal norms, informal societal norms, you divide it into 2, folkways and mores. Now, what are folkways? By the way, these 2 words have been given by an American sociologist whose name is Mr. William Graham Summer. That's his name. Okay. So this is the person who has given this idea of, who has given the words folkways and mores. Now, if you look at folkways, folkways are customs and conventions, you know, normal day-to-day customs and conventions. What are mores? Mores are, these are more likely to, you know, they distinguish between what is right and wrong. Like for example, if you say drugs in society, is it right or wrong? That's a more. Folkways are normal traditions, normal day-to-day customs that we have. Okay. So which one of the following statement is right? Now that I told you, folkways grow into tradition. So folkways are day-to-day customs and all these things. They grow into traditions and traditions grow into customs. So this 2D is the answer. Okay. So folkways are patterns of conventional behavior in a society. Tradition is a practice. Customs are derived from social norms, which regulates proper and acceptable behavior. That's why it's folkways. Mores is again between right and wrong, decision between what is right, wrong and all of that. So 2D is the answer. Let's come to the third question. Now, third question is also related to society, but this question is a little, you know, you just have to read and understand, and I apply the idea of convergence. Even if you have not read this, you know, coming to the process of elimination part of it, if you look at it, from process of elimination we can pick up the right answer. So you really don't have to know sociology theory to answer the third question. What's the third question? Which one of the following statements is correct with respect to the convergence theory on social change? The societal adaptive culture is changing more slowly. As societies become modernized, they begin to resemble one another more closely. Now look at this B. See, as societies are becoming modernized, they start to resemble each other slowly. That is, all are converging at one point, because everything will start resembling each other. Take for example, if you look at developed countries, you know, if you look at developed countries, let's say US, you know, capitalist economies like US, Australia, Canada, if you look at these countries, you know, they have similar patterns, right? So if you, so that is about convergence theory. So when all societies which are modernized start resembling each other, right? So that's the answer. Developed countries show more growth in social change than the less developed countries. That doesn't really talk about convergence theory, because we are not talking about growth over here. Strong opposition by old people retards the social change, which is absolutely irrelevant there. Okay. So it is 3 is the answer. Okay. So convergence theory presumes that as a nation moves from early stage of industrializations towards rapid industrialization, they start to begin to resemble each other in terms of societal norms and technology there, right. So you can take any kind of development or industrialization, anything that is taking place, you know, all these societies start resembling each other. Okay. So we are done with that one, the third question. Let's come to the fourth question now. So the fourth question is related to microeconomics types of markets, which I have discussed in class. Remember, we were talking about types of market: monopoly, duopoly, oligopoly, perfect competition, right? So the question is a very straight question. It is microeconomics question, and the question is from types of market. So in our textbook also this is there, right? All these questions were there in the textbook. So what is a perfect competition? You know, monopoly is only one player in the market, right? There is only one seller and many buyers. Duopoly, only two sellers. Oligopoly, you have a group of sellers who dominate the market. What is perfect competition? Many sellers and many buyers. That's perfect competition. And what is the point under perfect competition which actually plays an important role is the pricing, right, in perfect competition. Now this was just about perfect competition. Yeah, so what's the answer here for perfect competition? You have many companies selling similar products with free entry. So there is no barrier of entry in this market. So many companies selling similar products is what is called as perfect competition, which is 4C. Done. Let us come to the fifth one there. The fifth question is about financial markets. Remember, we did capital markets, money markets, right? I talked about IPO, right? Share market, right? It comes under that topic, financial markets. So, what's the answer here? What is the cheapest method of marketing of securities with the only cost incurred being on sending letters of rights? Remember, I was talking about shareholders, they have a right, right, to existing holders, is what it is called as rights letter. Rights letter, that is a formal document informing current shareholders their right to buy rights issue. It's a very straight question there. So, we have done this in IPO, right. Okay, so, sixth question, I have already done that for you. Let us move on to the next question. Seventh question is about Mudra Bank, and which I kept on telling in class, Mudra Micro Units Development Refinance Agency, and this comes in which topic? Banking, right. Remember, Mudra Bank we talked about, it is the Apex Bank, or it is one of the banks which has been recently set up for the development of the MSME sector. Remember MSME sector, micro, small, medium enterprises, and we also discussed in class what are the different types of industries based on the classification of their turnover, right. So, if you talk about type, micro, small, medium and large, right. Based on what we classify industries like this, it is based on turnover. So, for micro, the turnover is up to 5 crores, small is 5 crores to 75 crores, medium is 75 crores to 250 crores, and large is greater than 250 crores, right. So, when we say MSME sector, it is this sector we are talking about, and that is the reason we have Mudra was established for the development of the MSME sector. And remember the type of loans we did under Mudra, we talked about Shishu, Kishore and Tarun, right. So, we discussed those in class, right. So, which of the following come under the offerings of Mudra? Micro Units Development Refinancing Agency, remember the types of loans we did, Shishu, Kishore and Tarun. These are the names of the loans, right. So, remember loans up to, this was up to 50,000, then you had from 50,000 to up to 5 lakh, then greater than 5 lakh up to 10 lakh, and remember in class I was talking about Tarun T10, remember it like that, right. So, why all these things? Because we want more credit to be given so that we can develop the MSME sector more, especially the micro industries, right. Okay, so which one of the following come under the offerings of Mudra Bank, right. So, what is the answer here? So, you are talking about, is it credit for large industries? Obviously not, because the very idea of establishing Mudra was for what? MSME, micro, small, medium, right. So, therefore, 2 is wrong, okay. So, 2 should not be there. So, straight away you have option number C and option number D which go off, right. So, what is the answer there? So, you have which of the following come under the offerings of Mudra Bank? You have 1, 3 and 4, which is B, 7B. Okay, so let us come to the 8th question there. So, we are done with the 7th. So, that was the 7th question which was under banking. 8th question, which one of the following are the key reasons for encouraging startup entrepreneurship? Remember we discussed in class about Startup India, Stand Up India. We are talking about so much of policies and incentives that are being given by the government to encourage entrepreneurship, right. So, what is the idea or the key reasons for encouraging startups? Obviously, it is innovation. You want to have new innovation, bring values of proactivity into the society, right. So, it is not focusing on service, because service industry is what service industry will be like banking, education, everything which is not industry. So, entrepreneurship need not be only for service, it can also be for industries. Therefore, second one is wrong. 1 and 3 is the answer. So, that makes it C. Okay. So, 8th question was related to which field? We are talking about entrepreneurship, skill development and entrepreneurship, right. So, that was the thing. Next one, let us come to the 9th one. Which of the following are the main objectives of the gold monetization scheme launched in the country? Now, we talked about this at length in class related to gold monetization, right. Gold is one of our imports. We import gold, and when we import, what happens? There is a pressure on our balance. What balance? Current account balance. What do you mean by current account balance? Okay. So, when we talk about imports and exports, right, imports and exports. Remember in class we talked about balance of payments, which popularly called as BOP, balance of payments. Balance of payments, we have two types of account, current account and capital account, right. So, what is current account? Current account gives us the balance of our imports and exports related to what? Goods and services, and all our imports and exports. So, India, if our imports are greater than our exports, this is our condition. Therefore, our current account balance, our imports are greater than our exports, therefore, we have a current account deficit. Again, because we are a developing country, our objective is we want to increase our exports, But as of now, what is the situation? Our imports are greater than our exports. What is our major import? One, oil, then the other one, gold, right. So, gold, why we import gold? Because we do not have that resource in our country, it is less of that, therefore, we need to import this. Now, what was this gold objective of this gold monetization scheme is, we wanted to reduce the import of gold so that our current account deficit will reduce. Why is that so? What happens when our imports are more, and if the gold what we are importing, because already we have current account deficit, let us say global oil prices are rising, therefore, oil there is no substitute, therefore, we are importing oil, our current account deficit is there. But what happens is when gold also you are importing, it adds on to the current account deficit. So, in order to reduce this pressure on current account deficit, to control current account deficit, government came up with this scheme called as gold monetization scheme, wherein monetize, the word monetize is the gold will earn you something. Through how? We came up with something called as sovereign gold bonds. If you remember, we talked about that in class, where you can make investments in gold not in the metal form, but in the bond form. And what happens that way? Let us say for example, I want to buy 30 grams of gold. Now, instead of buying it as a metal, you can buy it in the form of what? Bond. And that bond will fetch you returns. Let us say for example, I want to invest in a sovereign gold bond for 5 years for 30 grams. So, I will buy, like how we buy gold, you can buy 10 grams bond, 20 grams, 30 grams, whatever you want. And then for the next 5 years or so, as the gold rate keeps appreciating, the value of the bond also will keep appreciating, plus the bank will also offer you an interest rate for your investment, which is we are monetizing the gold, right. So, this was the objective of this gold monetization scheme, a very good investment option there. So, which of the following objectives of gold monetization scheme? To monetize gold holdings in the country, obviously option number 1. To increase export of gold? Wrong. It is not to increase, but to decrease the, to increase export of gold from the country? No. It is not the answer, right. We are not talking about increasing export of gold, that is a wrong option. To reduce India's import bill? Of course, yes, we want to reduce our imports. To meet the targets of reduction in fiscal deficit. Now, fiscal deficit is about income and expenditure, right. So, therefore, the answer is, when we talk about to meet the targets of reduction in, if the option was current account deficit, then it would have been the right answer. Fiscal deficit has nothing to do with this one, imports and export, that is current account deficit, right. So, that is a word of caution there. So, 1 and 4 is wrong, clearly the answer is 2 and 3, which is C, okay. That is about the 9th question there. So, 1 to 9 we are done. Let us come to the 36th question. 36th question, yeah. Consider the following statements. Greenfield privatization or incremental privatization denotes encouragement to private sector in areas hitherto reserved for public enterprises. Cold privatization refers to measures taken to distance public enterprises from the government there. So, the answer is both 1 and 2. We discussed greenfield, new investments where government, you are talking about privatization is all about encouraging private sectors, right, which were previously only reserved for the public sector. You are talking about now investments in the private sector. Not allowing new investment on the part of the public sector agencies, preferential treatment given to the public sector. So, cold privatization refers to public enterprises made to behave like private enterprises by giving financial autonomy to investment decisions, entering into MOUs. What are MOUs? Memorandum of Understanding to fix prices or output. So, what is the answer here? Which of the following are correct? Both 1 and 2. Right? Greenfield privatization or incremental privatization denotes encouragement to private sector in hitherto reserved for PSUs. So, both are right. So, 36 both 1 and 2. The next question we have is 61 there. So, let us come to the 61st question. Yeah. Which one of the following is a viable alternative to term loans and are instruments for raising debt finance by large publicly traded firms, right. So, you are talking about debt, raising money, raising capital, right, by large publicly traded firms. So, the answer here is debentures, okay. So, it is 61 you have is B. So, what is a debenture? It is a debt security issued by a company which offers to pay interest when the company is borrowing. See, every objective for any kind of an investment is you want returns. Why do people invest? Because you want returns. It is not that we are doing charity to someone. So, where different methods of investments, like shares is one part of an investment, bank fixed deposits is an investment, buying land is an investment, like that, various forms of investments. Debentures is an investment where the company is raising debt from the investor. In return, what the investor is getting is interest. And what is the company getting? The company is getting the capital, the money to run the business, right. So, that is the answer there. Okay, so 61 is B, and the last question 85. So, 85th question if you take. Now, this is a little difficult question. A situation where very high prices are charged from customers for a limited period of time is known as gouging. Okay, that is the meaning, the word. Hoodwinking, bamboozling, these are words for cheating. Okay, so the answer is 85, gouging. That is the answer.